Hey folks, what a view behind me. I'm at Blackbull Markets headquarters here in Auckland, New Zealand. Speaking of views, you can get TradingView paid plans for free at Blackbull Markets, saving you up to $600 a year. Get either the Essential Plus or Premium plans absolutely free. All you need to do is trade from one lot a month at Blackbull Markets. And you can also get a 100% deposit bonus for your first deposit up to $1,000. All you need to do is click the Trading Nut link in the description below. Hey, start trading Forex indices and commodities with up to 800k of Blue Guardian's capital risk-free. Just pay a small one-time fee to take the challenge, hit a profit target and get funded. Then keep up to 90% of your profits and enjoy fast weekly payouts. Now for futures traders, Blue Guardian Futures offers up to 450k in funding with 100% profit on your first 15k. With low targets, no activation fees and unlimited resets, it's one of the best deals in the industry. Visit blueguardian.com or blueguardianfutures.com to start trading today and grab their limited time discount code.
Hey, what's going on, y'all? This is Brinks Trades coming to you live with another week of breakdowns. Hopefully, everybody's doing well. Hopefully, everybody had a great holiday and a happy new year. Hopefully, everybody can see my screen too. Yeah, I mean, we're gonna go ahead and get into it. So I see we got 13 people on the call. So where's everybody calling in from? I love to see where the people are calling in from. Hugo, what's going on, man? What's going on? Happy New Year. See who anybody else on the call today. Let me see. I'm just gonna drop this link in my chat so people can hop on too. So we're gonna share this out. Copy link. Share. Live on YouTube now. So you guys are in my Telegram. You should have just got a message saying that we're doing that. So cool. New Jersey in the house. Okay, Canada. Shout out to Canada. I'm working on a different screen than usual. I'm working on my smaller MacBook today, so I might not be able to see everything, or I might be squinting into the camera. So let me know if some of the stuff is cut off on the stream, like the window is a little bit smaller than usual. So again, if you guys obviously know by now, if you don't know, my name is Brinks Trades. I am a day trader with a decade of experience. So 2015 actually is when I took my first trade. 2014 is when I actually learned that there was this cool thing called trading that could potentially, do something for me. So ever since then, I started in the Forex space, came into the future space about a couple of years ago. At one point in time was managing 700,000 in prop firms for Forex, then made the transition to futures, and is currently around 1.7 million across a few different prop firms. Also trade my own personal account as well. So I want to definitely get into these charts. I'm the resident indices analyst for the Trading Nut podcast. So every week I come on here and basically just give you guys a breakdown on what I think the charts are going to do for the next week and what we should be looking at for our bias. I actually took a couple of trades, and I'll show you guys this week. I actually took 2 trades on Euro futures and GBP futures on the same day, same session, and I kicked off this year with a cool $9,000 win. It was about $9,300. And so I'll show you guys the receipts of that after we get done with the call. But yeah, I mean, 2025 is going to be the year, man, where a lot of crazy things happen in this space. I mean, I've put up some numbers in years past, but this year is going to be a really crazy year for me, and I think it's that is going to be that trade alone is just a testimony to that. So I'm definitely looking forward to see what the rest of this year has to offer. So, and we really technically we haven't even really hit the first full week of the year yet. So it's going to be a crazy ride. And so I'm happy you guys get to be a part of this. So Orleans, Monday 2025. Okay. Happy New Year. Happy New Year. Shout out to Orleans. Shout out to Lindsay. Shout out to Super Muir. Is it Muir? I don't know if I'm pronouncing that right. But yeah, so again, I want to come on here and we'll talk a little bit about some of the other stuff that I do, like the mentorship and things like that afterwards. But I really want to get into these charts. So, as you guys know, I start with the dollar index because if we can get a better understanding of what dollar's doing, then we can get a really good bias for the week, and so and that's going to help us with the other pairs and the other charts that we're looking at too. So again, coming into dollar index, there's a few things. Obviously, this is a new month, new year, right? So I kind of want to start in these very, very high time frames, right? These yearly, monthly time frames to see where we're at. And so on this monthly time frame, wow, this yearly time frame, this is a crazy high, right? Crazy, crazy high chart. There's a couple things here that I like, right? And so usually I don't ever go this high, but again, at the beginning of a new month, a new year, I kind of want to just take a look at what's going on in the bigger time frames because it might give me a overall idea of where the market could be potentially running to. So let me get rid of this. I don't want this on the monthly time frame. So on this monthly time frame, right? We obviously have a draw of buy side liquidity that's sitting up here, right? And it's gonna hopefully we're running with the idea that it's gonna potentially take out this high. One thing that I like on this time frame here is that we've traded past consequent encroachment of this wick of this. It's a yearly wick at this point. It's a 12-month wick. So there's a strong probability that the market's going to want to run for this high. The only thing I don't like is this fair value gap that we're technically trading into, right? So we could respect that and fall over, but ideally, I like the idea of us potentially getting up here at some point. Again, this is a 12-month calendar or 12-month chart, so this could be another year, maybe 2 years before we even touch this, right? But again, knowing that these big markets and big institutions think on bigger time frames, they're looking at the weekly, they're looking at the monthly, right? The daily, right? They're not really dropping down to these hourly charts that we trade. But again, the same principles that we see on these higher time frames are going to run the lower time frames as well. So there's potentially a probability that we're going to get up there. Jumping out of the daily time frame, or actually let's go to the weekly time frame because that's a very, very, very high time frame that we don't really pay attention to that often. The monthly, again, we still, there's still a strong probability of us potentially running for this high based on this low range or trend line liquidity that we're building up right there. So we'll see how that plays out. Weekly time frame, which is again, this is what we're going to really want to focus on. So again, what's happening in the next 5 days, right? 5 trading days is really what we want to focus on. Because again, long-term predictions, a year, 2 years out, I mean, anything can happen, right? We could be in a recession, we could be in a war, we could be in an economic boom. Like there's a lot of factors that control that, like yearly kind of year over year growth in the dollar or decline, but we can kind of make an idea based on what's going on in the next 5 days. So ideally, so there's a couple things that happened this week. There was a few things that I saw over the past couple weeks that I didn't like for bullishness, and I said basically we had failed to really trade over this high here. Over the past couple weeks we had 1-2 weeks of rejections on this this range here. And so basically what happened is the market tried to come through once, twice, and I figured, there was an opportunity for us to potentially trade back into this fair value gap here. Not necessarily a break in structure, even though when price really fails to get through a new high, you kind of always have to be on the lookout for, is this going to break structure and turn around? So ideally what I wanted to see, best case scenario, was us trade into this fair value gap and then take out this high. Now, we don't always get the optimal pullback sometimes, right? This is always going to be a best case scenario pullback. But overall, the direction, I wanted to see is this continue to go bullish, because we didn't really have a reason for it to go bearish. Even if we drop down to the daily time frame on dollar, right, there's really no bullish breaks of structure or anything like that. And so, um, best case scenario, I wanted to see this trade down. And so what we had actually ended up getting was us respecting this bullish order block pretty much on the money. Um, there. So you can see that we really respect the consequent encroachment of that level pretty much perfectly, of that order block, right? So again, consequent encroachment is the 50% level of any order block, um, fair value gap, wick, etc. Right? So when we talk about those things, we saw the market really respect that level. So ideally, I wanted to see the market continue to go higher. That's exactly what we got, right? So we ended up pretty much coming straight out, really trying to wick below this low, respecting that volume imbalance right there as well, right? And continue to ride things up. So going into next week, right, there's a few levels that I'm looking at. The main level obviously is the high of last week, right? So I would like to see us to come up here and really take the high there, right? But also looking left, right? There's a few levels again. This trend line liquidity right here really says, hey, there's buyers over each of these highs that the market could come and grab and get. Um, there's a few levels in this. If I get rid of this trend line for a second, there's a few levels that I like a lot in here. The first is this relative equal highs right here. Boom. And then I'm going to look at this like first level right there. So ideally this first level is going to be the first kind of target. And this is going to be at 109.77, right? And so ideally, if we take out that high right here, ideally I want to see the market continue to run. So I'm looking at this high initially kind of like as a safe level for us to try and trade to this year or this week. And then if we get an extended run, I'll be looking at that. So I'm still bullish, right? And then as far as the fair value gap goes, I see that right there, and I'd like the market to kind of pull back into that, right? And really give us a reason to go higher. This fair value gap also has a volume imbalance on it, so I'm going to extend this down a little bit right there to that low. So because that volume imbalance right there at 108.31. So ideally, I want to see the market really run into this, and we'll see what happens, because I think this week is FOMC week. It's the first FOMC of the year. I think it also, well, the election is next. When's the election? I think it's like the 20th or something like that. So it'll technically be the last FOMC of this current administration. So it could be a little volatile. So ideally, let's see what happens. But ideally, I want to see the market really run into that gap, pick up those orders, and then really start to go the other way. So again, I'll be looking at that high 109.35 and then 109.77. So jumping to Euro futures, this was a great trade that I took on here and on the pound futures. So we'll talk about both of those and kind of what happened there. But ideally, if we're going to the weekly time frame, I'm gonna hide a lot of this. So if we're going to the weekly time frame, there was a couple things that I wanted to see going into last week. So ideally, I wanted us to really run for this low, right? There was a few things that we saw that were really kind of crucial, right? So these relative equal lows right there, and then us violating this fair value gap right here, this BISI. So once we really took that out from this low to that high, that fair value gap, I figured we could probably see a run, lower. And I think we're not done with this run. So if I bring everything back, and I apologize, y'all know that I don't do these charts. Like, I don't look at this stuff from market close ahead of time. Therefore, when the market closes to like basically when I hop on these calls, it's like my first time seeing the charts. So my charts are always dirty. But ideally, so those relative equal lows right there. Again, once we kind of violated, and I guess technically at that point we hadn't violated the fair value gap here. So I'm gonna go ahead and get rid of this, all of this, so you guys can see. But what I wanted to see last week again was the violation of this fair value gap right there on that weekly time frame. And these relative equal lows pretty much said, hey, we're gonna probably come back down here, run this liquidity. And oops. I'm trying to plug my laptop in. So once we took out these lows right here, right, these sell side lows, I figured, hey, we probably could get a run below this. And so the next level I was looking at, well, two levels really were the low of this wick. Again, we didn't understand why the low, why would the market want to run for that low? And then also consequent encroachment of this wick right here. So those were the two levels that I wanted to see on the weekly time frame. So again, I wanted to see something like the market trade back up and then go down, and that's exactly what we got. So if we fast forward, actually, if we're looking at this from a daily perspective too, again, those relative equal lows are pretty clear, pretty obvious. And so I wanted to see the market trade back up into that gap and then drop. And that's exactly what we got. So the market really took out those lows, traded past consequent encroachment, and then came back up and respected it. There was a 4-hour fair value gap right here. That I wanted to see really kind of filled in and respected, and we did, at least the first one. So what I'm looking at on a higher time frame here, if we zoom in, is what I want to see happen. Well, this is that consequent encroachment, so I'm just going to make that line right there. Consequent encroachment of that wick. If we're going to be bearish, there's a couple of things that I want to see on a long-term perspective. I want us to really close below this wick because this is a weekly consequent encroachment. So it's going to really give us a good idea that the market wants to respect that level. And then this obviously is the low of that consequent encroachment down there at 1.0201. So we actually are in the process of inverting this initial fair value gap. So this could, us respecting consequent encroachment on that weekly wick and then inverting this 4-hour gap could mean that we potentially could rise a little bit. If that happens, there's a couple levels that I think the market could run to. Again, this initial fair value gap right there, right? And then that bigger fair value gap with the order block. I'm more inclined to think the market's going to go for this one only because there's an order block there and this kind of exists in a premium, right? So there's a lot more kind of like confirmation, I guess you could say. So ideally, I want to see the market really run for that and then find a reason to come down. It could respect this one right here, right? But I'm gonna be looking at that one, and if I miss it because it comes up here first, then maybe I'll see what's going on once we hit here on a smaller time frame. But ideally, I'm looking at one of those two levels, this gap right here, 1.034 and 1.37. I don't think we're done with this bearish run yet, and that's only because what dollar is showing me, and the fact that did we respect that? Yeah, we respected that volume imbalance too. But I don't think this run is over because what dollar is showing, and there's a lot of targets down here. So we have this trend line liquidity here. See these highs getting higher, right? So it's a good idea that there's probably money down there. So I think ultimately we're probably going to come down here. Um, there's a reason. There's kind of a draw on liquidity, but ideally, again, even at a daily perspective, looking at this, I'd like to see us trade back into this bigger daily fair value gap here, right? This bearish one right here. So ideally, I want to see something like this, where we come into this gap and then respect it and find a reason to really break structure and go the other way. I'm going to be really patient with this one because there's not really like a um, I gotta see this play out because this is a daily gap. It could come up here and then it could just turn around and run away, but it also could stay in here for a day or two, right? So this is kind of like where you got to be careful where you're trading those daily fair value gaps or trading those daily kind of retracements into the range because um, it could stay in here. It could be a very quick retracement, but it also could be in there for a day or two. It could trade all the way back up to this volume imbalance and then go down. So like just being patient is going to be the biggest thing this week. It's also going to be a short week for me because I think it's FOMC week too as well. I'll look at the calendar before we get off here. But ideally, this is where what I want to see happen again. So first target will be this low right here. So ideally coming into that range, then taking things lower, right? And then I'll start to look back at these targets here, right? That low right there, the ultimate low, which is that all-time low that we hit in October. So I don't think we're done. And I think if I go over to pound, it's going to let us know that we're also not done here too. So again, higher time frame on pound, right? And this is something I've been calling out for a long time. I think we are going to run these lows. And I don't know how far. I mean, we could hit this trend line. We could hit like the halfway point in this trend line. We could take out one or two of these levels and then turn around and reverse and go up. But I have a feeling that the low that we're going to hit on the weekly time frame on British pound. Again, British pound is going to be your British pound futures. So 6B1 is British pound futures. And this is essentially the same chart as GBP USD. But I think we're potentially going to head for this low down here. This fair value gap that sits under these this trend line liquidity. I think that's going to be like the ultimate target. This is a weekly time frame, so this could be literally all year, right? This could be the next 2 or 3 months of just bearishness, or we could take out one of these lows and then reverse up. But again, I'm more inclined to think that we're going to probably run these lows. So what am I looking at for the next week on GBP? Let's look here. So I kind of have to break this up week by week, and I'm not thinking that we're going to get all the way down here in one day, right? Just like I said, this could be an entire year. This could be an entire quarter of us getting down here week by week, right? So ideally, what I want to see here, get rid of that. And again, I apologize for having all of the junk of my charts, but that lets you know that I actually trade this and actually analyze for real. So ideally, what I'm looking at is the low of last week for a target, but then we also are very close to this next low here, which I think will be the draw on liquidity. So ideally, this is what I want my target to be for this week. So ideally, I want to go down to the daily time frame and really look for levels, and just like the level on euro, right? Again, we have something very similar, like a daily fair value gap opened up after a huge run last week, and this was again part of that big day that I had. I think I actually made more on pound futures than I did on euro. I think the majority of that trade, I think it was like 7 grand, was coming straight from just pound futures. 7 of that 9, something like that. Maybe, yeah, about 7 of that 9, I think, came from pound. Um, so ideally, this is what I want to see in a daily. I want us to respect this fair value gap there. There's a very, very tiny, very, very tiny volume imbalance right there. So we could see something like the market go back up into uh, that wick right there. It's very, very tiny though. Um, so ideally, want to see us, respect this gap, trade into it, and then fall away. If I go down to the 4-hour time frame, seeing if there's anything here, since we've already we're still in this fair value gap here, right? This initial one, we could see a very quick turnover, right? We also could see this trade into this higher gap here. I don't know why I made this green. It should be red. So we could see a retracement into this higher fair value gap here, like that, right? Or it could just turn around and respect this one and go higher. I like this one again more, just like on Euro, because it's in a premium, right? And it has more of it'll be closer, to that order block. And the thing I always say about order blocks is that an order block and a fair value gap is going to be the strongest form of support and resistance you're going to see in the markets. So ideally, that would be the top one, right? So yeah, so ideally that's what I want to see. So best case scenario, we're in here, but I'll be looking to see how this reacts, on the smaller time frames come Monday, Tuesday, right? So to see what the move is like. So that's pound futures. Let me go over to the comment section and see what y'all are talking about. Tony, I see Tony taking notes. Man, I think Tony's gonna be a killer this year, man. He's consistently hit me up in these chats over and over and over again. Okay, Sheila. Okay, I gotta remember that because this is not the first time I've seen your handle in here. In that, and I know you. That's not the first time you said that. I can't see the emoji on this one. What's up, Fasil? Where you calling in from, man? And then Diggs, BT Dub. Hey, what's up? That's what's up, man. So cool. So yeah, so let me go to Nasdaq. I know that's why a lot of people hop on because they want to see Nasdaq. I also still look at Nasdaq. I just trade the currencies more because they're easier to understand. To me, they are easier to trade, right? I think everybody knows the feeling of sitting in Nasdaq and being up or down in those swings, those price swings. Even if you know what they're doing, a lot of times those price swings are crazy mentally. So I analyze it. I'm not doing as much trading on it. I want to kind of lock in the currency futures this year because I think there's a really unique opportunity there, especially like when you're looking at those charts and you're seeing like what the run they could potentially do this year. So okay, a couple things on MNQ. I'm just getting rid of charts again. So a couple things happen on MNQ, right? So weekly time frame, right? We traded into this overall order block here, this weekly order block. We wicked on it twice, right? And so this is like that technical science. I'm going to zoom in for you guys. So not only did we wick into this order block twice and respected it, we also traded into a fair value gap that we respected. So this is again higher time frame play. But if you look closely at this second wick, and this is a gem I'm gonna drop, right? This is probably should be more for my pay community, but whatever. You guys are gonna get a lot of love out of me this year, so be patient with me. So right here. So we also wick down here twice, but this wick actually took out that low there and then ran back up. It's a very subtle, very, very subtle running of liquidity right there. Right. And then decided it was going to trade back into that range. So not only did it wick down once, but all these people looked here and said, this is the stop loss. We're going to probably take this thing long again. And then it came back one more time just to take those people out, and then still respected pretty much consequent encroachment of that fair value gap. That's a huge weekly swing. I mean, we're talking this wick alone is over 500 points, right? So this is letting me know that if you're trading Nasdaq next week, this is probably could be a very bullish move. So there's a couple things I'll be looking at. Again, I'm going to be looking at consequent encroachment of this wick that we just formed last week. Ideally, I want the market to stay above this, right? I want it to be above. The bias is going to be bullish. And ideally, I mean, best case scenario, I want it to stay above consequent encroachment. But really, this fair value gap here, I think if we're above this fair value gap and then consequent encroachment of this wick, then we could potentially go up. And take things higher, right? So ideally, that's what that's what I want to see happen this week. So again, taking buy side liquidity to the high and really run things. I don't know if we'll get here all in 1 week, but this will be kind of like the ultimate target. A couple levels again in between there that I'll be looking at to see how they respond. On the up end, consequent encroachment of this wick, right? It's that 50% level. If we have a hard time stuttering there, then it could signal that maybe this is not as solid of a reversal as we thought. There's buy side liquidity there, so I'm just going to put money so you guys can see. So clearly there, clone, copy, ultimate target right here, right? I want to see how the market respects this CE right there. But ideally, I'm bullish. I think this is a very good potential bullish setup. And then, yeah, I mean, really inverting this, or not inverting, but really closing above this fair value gap on the daily time frame will be awesome too. So we swept that low, we came back up here, breaking structure and disrespecting this fair value gap again. All great signs. Closing above this, respecting that, and then really taking out these highs, going to be a really, really, really good sign here. So if we're going to be bullish, then that's the stuff that I want to see start to happen. If we ever close outside of this fair value gap, probably strong possibility that we're going to continue to go down, especially if we violate that consequent encroachment at 21,241. Skippo says you still don't trade US30. Nah, man, I don't trade US30. I analyze it all. It's just that, like, it's one thing to analyze, right? It's one thing to kind of mark up the charts. And I mean, y'all have been watching me for like the last year. The markups are usually not wrong. Um, I think it's another thing to sit through the trades on those. And to me, NASDAQ, if I was going to trade indices, NASDAQ or ES are the best ones. One, because NASDAQ, they follow each other very clearly. And ES is the easier one to trade. If you guys want to trade something that's slower or doesn't move as fast, NASDAQ is the one that's more volatile. But YM kind of moves a little crazy. And again, every trader, I think everybody, especially the Q Banks disciples, right? Like the Forever and Profit students, they love trading US30. And I think it's because Q, Q's a big US30 guy. And I think that kind of spread to a lot of other people in the industry when they saw that as the first indice that they started gravitating towards. And so a lot of people who's traded either traded because their mentor traded it, and their mentor traded it probably because Q Banks was trading it. But I'm good. I'm good on US30. It just moves a little bit crazier than the other ones. It's not the stuff still applies. All the rules still apply, but it's just a little bit crazier with the price swings. If that makes sense. JS561 said Colorado. I know this username. I feel like I feel like this is somebody I know. If not, then he might be a mentorship student. But shout out to you. I think I already hit this, but Dick said, "What's up?" Orleans Lindsay said, "What's up?" 2025. Orleans, where you calling in from? Are you in New Orleans, or is that just a name? Anyway, let's go to ES. Let me check this out here. Oops. So ES again, same thing. I mean, this is pretty much like a verbatim thing. Also, for the people that trade SMT divergence, right? And this is something I don't really like. I notice it from time to time. I don't really use it as a factor in my trades. But this sometimes you can't like not see it. So we have this order block here, right? Or this, I guess we could bring this up here. It's one big order block. And so we really haven't broken structure here. Us closing below this low on ES would cause a break in structure, but see, we've wicked there twice. The cool thing about ES and Nasdaq is because you can use them sometimes to see what's going on on the other one to kind of get a reference for what the market might do. And so if you look at these two wicks, right, these are the same wicks that we just saw in Nasdaq, but notice how this wick closed higher and it didn't take it out, right? But if we go back to Nasdaq, where'd it go? Thank you. If we go back to Nasdaq, we did wick below that low, right? That's called divergence. You might hear some people call it SMT divergence. It's something that I don't really pay attention too much when I trade, but sometimes it's so obvious you can't not see it. But what that means is the market on one chart was digging for liquidity more, right? It was trying to get the last little bit of orders before it went up. And the other one didn't want to go that low. So it's basically saying that there wasn't as many orders on ES that there was on NQ. And if I could find my NQ chart again, okay, there we go. So basically what it's saying is that there was no need for us to go down that low. So it's probably a good sign that, we're going to continue to go higher. So anytime if you see stuff like that, where you see one continuing to dig and the other one is kind of pulling back, it's letting you know that there's probably a reversal that could happen in the market. And that kind of lines up with what we wanted to see here. So jump into the weekly time frame. Again, I want to see us really start to take out these highs. And so the high that I'll be looking at on this time frame, at least, if I get rid of that, is this old high of the previous week. So that'll be the high. Jumping down to the daily time frame. Again, there's a lot of stuff that I wanted to see. This SIBI here, right? Need to make that red. This SIBI here, I need to see this inverted, right? I would love to see this inverted before we go higher. Within that SIBI, there's also a secondary one that I will feel really comfortable buying once we get above that. Or I guess I'm not trading ES at all, to be honest with you. But like if I was trading ES, I would feel really comfortable going long once we invert this gap inside of the bigger gap, because it kind of gives me a reason that, I'm looking at the market like if we can take out old civvies, or if we can start violating things that are supposed to maintain a bearish order flow, then it's letting us know that the market is no longer trying to really go for sell side liquidity. So on the 4 hour, or this is the daily time frame, that's kind of like the best case scenario for me. Going to the 4 hour, again, breaking market structures. We did kind of have a market structure shift where we swept this low here, and we're trading above that high now. So ideally, if I was trading and I was bullish, I would want us to stay above this high and trade back into this range here. And so that's ideally what I want to see. And so maybe I would be bullish till we hit this gap or this gap to see what would happen once we inverted it. But ideally, this whole gap as a whole is a daily fair value gap. And if we're going to be bullish, we need to invert this. And inside of that, again, is a smaller daily fair value gap that, again, if we invert that, it's going to be a really good sign. So also going down to the daily time frame here is a kind of a few clues that the market is ready to go up. So the consequent encroachment of this wick here, right? We really respected that. And so we had 1, 2, 3, 4 days, right, of us trying to really get below that, and we couldn't. So it's letting me know that this is probably going to be a bullish market, or at least, trading back into the gap. So once we get in here, kind of have to sit in our hands until we figure out if we're inverting stuff that should be respected for a bearish run. So yeah, so that's ideally what I would like to see. On ES, let me go to YM since got some people asking about that one. Let's see here. See, and this is kind of like redheaded stepchild stuff, man. I hate YM, but a lot of people make money with it, so I can't really knock it. I watched, I think it might have been Q Banks have a 500K day trading US30 or 500K week, I guess, in a swing trade. So I can't knock it, but it's just not. It doesn't follow the rules that I'd like to see most of the time, and when it does, the swings are a little bit more wild. So, so I'm gonna get rid of this. So ideally, looking at ES, there was a couple things that I saw here. Again, draw on liquidity that I thought potentially we could sweep to go up. We didn't quite get that low. We respected this order block fully. That's the first thing. We did sweep the previous low, just like on Nasdaq, right? And so that kind of lends more strength to the idea that since ES didn't do that, we could be seeing the market continue to go up. I don't like the fact that we closed below this fair value gap. I would have liked to see this close above that. So right off the bat, I already like this setup less than I do on ES or Nasdaq. There are some other good things here though, right? We're respecting consequent encroachment of that gap, which also lines up with the order block there. So I would say if we stay above this, then there's a probably strong chance that we'll go higher, right? But the minute we take out that order block or the mean threshold or consequent encroachment of that order block, then we'll probably continue to go lower. So I'm still bullish, even though this is kind of a violation, but I'm only really bullish based on the other things on the charts, on the other charts. So not really anything here. This is kind of like, I don't like it too much. If I was going to be bullish on US30 or YM, I guess, right, Dow Jones, I would want this to be taken out, this volume imbalance to be disrespected, right? I would want us to start trading over that. That's pretty much, there's a volume imbalance there, and then there's a very fair value gap right there. So I'll just make this red. And actually, just like Nasdaq, this whole overall gap should be red. So I only do this so I'm not confusing people between my BISIs and my CIBIs, and I'm also kind of like, just helps keep my charts organized. So yeah, ideally, a couple things here. I want to see consequent encroachment violated of this wick, meaning that I want to see a close above the 50% level if we're going to be bullish. So that's so I want to take things that higher because of that. And then again, this overall bigger gap, right? I want to see it inverted, but I definitely want to see the smaller daily fair value gap inverted. So yes, ideally, see, to see, ideally, I'm bullish on this, and it doesn't. I would want to be bullish on this based on the other charts, but there's nothing really here that tells me that this is 100% certainty. I'm kind of getting a lot of conflicting stuff here. So again, this is kind of one of the reasons that I don't like trading YM or US30. Yeah, so said I trade US30 and NAS100, but when I trade, I don't like the other. So a good thing to do as a trader is really just having um, having both charts up, right? And finding the charts, and it doesn't matter what market you trade, but find the charts that should be correlated, positively and negatively, like with your assets. So like NAS 100 and US 30 should technically be going the same way, right? And so having those up and will kind of let you know sometimes if one is digging lower, right? Let's say you're expecting a reversal, right? And Nasdaq just keeps tanking, it's tanking, but like US30 kind of holds, right? And it doesn't really like keep going lower, then that could be a sign that Nasdaq is digging for its last little bit of liquidity before it reverses. And US30 is done looking for liquidity, so it's ready to reverse, right? And so a lot of times I look at that with like when I'm trading currencies, right? So if I go back to dollar index, right, I might have this chart open, even though like I don't trade dollar index, right? I just use it as the barometer, right? I don't, I don't, I don't even think I can take a position on dollar index on my brokers for my futures brokers, but I'll have this chart open and I'll be looking at euro because basically these things should be moving opposite of each other, right? You see how one is continuing to go up and it's basically the same structure, right? But it's just opposite. Um, so if that's the case, right, like when I'm in my like actual trades and positions, I want to see dollar moving the opposite. If I walk into a situation and dollar is moving the same way as euro or it's moving the same way as pound, that's letting me know right then and there that like might not be a good day for me to take those trades because these things should be moving opposite of each other. Right. So it's kind of good to have a chart and then another chart that is going to move the same or opposite. And for again, if you trade currencies, dollar uh, is the easiest one really to have open, um, because if you know like Euro futures is essentially the same thing as Euro USD, and all Euro USD says is Euro goes up, dollar goes down, or dollar goes down, Euro goes up, right? That's all that means. Or USD JPY, right? Like if dollar's going up, yen's going down. If yen's going up, dollar's going down. So all you know those relationships. So actually having that actual chart open kind of lets you know like, yo, like I should be looking at this chart and it should be doing this, right? So just another confirmation, right, that your trades are going the right way. So I don't trade dollar, right? But um I'm sorry, I don't trade dollar. I don't trade gold. But um the question was, what do you say about gold versus the dollar index? I see gold and dollar moves the same way when I'm ready. So technically, if you look at gold, right? And again, I don't trade gold. I don't think gold's going to be moving crazy this year because the election's over, right? And election years of uncertainty, right? But if you look at gold, it's actually XAU, which is the symbol for gold. Um, and it's XAU USD. So what this is really saying is that when dollar goes down, gold should go up, right? And so they should have a negative correlation to each other. Like in theory, one should be going down and the other one should be going up. But yeah, as you can see, gold has been going up and dollar's been going up, which is another reason why I wouldn't want to trade gold. But um, so ideally, like yeah, they should your pairs should be correlated. Um, these correlated pairs should be moving opposite from each other. Like you shouldn't see euro going up and gold and euro going up and dollar going up at the same time, right? So you want to look at, that relationship on the forex chart, right? If you trade for currencies, what is the relationship of the pairs? Because this is basically an inverse relationship. Like one should be going up, the other should be going down. And so because it's not doing that, I just wouldn't want to put faith in that. So, but everybody's different. Like there's certain stuff like people love certain currencies and assets, and I don't really know why people love it. So yeah, I don't really know why people love certain things. I think a lot of times people just love the idea of trading like gold. Like they like, like I love gold because it's like I can say I'm a gold trader. Like it's, and I think it moves a little bit faster. So when it does move, it moves a little bit faster than some of the currencies. So like people fall in love with it based on that. But I look at stuff from like a very technical level, but then I also look at it from a very like kind of like relationship level and like what should these assets be doing. So kind of have an underlying understanding of what assets should be doing when, but then also going to the charts too, right? And so I guess there's a little bit of that fundamental stuff, or just not even fundamental, but just general relationships between assets, right? Because not everything is connected, right? Like all of these charts, it doesn't matter if it's currencies, indices, right? They're all going to have some relationship to the dollar. They're all going to have some relationship with each other. And so, they should be doing certain things with each other, so, but that's all I got for you guys. So I'll stay on for any other questions. I got a couple minutes. So feel free. This is a really good time to kind of ask me anything. I will leave you guys with this parting gift. Of the AK trade. If you guys are well, actually couple parting gifts. So motivational level, right? So I'll show you guys the Telegram chat, and I'm actually transitioning away from Telegram. I'll talk about that in a second, but again, if you follow me on social media, you probably already seen this, but this was basically the screenshot from my Ant Live account. Again, I had to kind of blot out account details because I don't need people running up in my account. And trying to hack my account, but this is Chrome tab window. Let's go entire screen. I'll share this real quickly with you guys. So it's going to be real freaky. It's going to be me sharing. Oh, wait a minute. It's not letting me do that. That's weird. Okay, never mind. Yeah, I can't share my whole screen. Okay, never mind. Well, what I was going to show you guys is the actual screenshots from the trades that I took this past week. Again, I took those two trades on Euro and GBP. I'm sorry, Euro and Pound futures. And so again, if you guys are in my mentorship, or I'm sorry, my Telegram chat, you can see that. So I guess we can't show that, but I also wanted to make the announcement here that so I'm basically opening up my mentorship again. I know there was a lot of people that were interested, and I've really been telling a lot of people over the past couple months that, some stuff is coming for 2025. So I'm opening up the mentorship. I'm actually going to be doing kind of three main, I guess, services, right? So the first thing is going to be an online course. This is going to be my first time doing a course. There is a community called Whoop, which is basically a website where you can kind of like host a course, right? So it's going to be a live online course, or live videos that are uploaded every week, right? Or live videos that are kind of like a database or that library of videos, basically outlining my strategy, so you guys don't have to wait for a mentorship or a boot camp or me to teach you guys in in a live setting. So it'll be like a library of videos that outlines my entire strategy. There also will be a Discord, right? Some transition from Telegram to Discord. And basically that Discord is going to be for a community setting, right? So people can really kind of talk and and actually form more of a community in there as well. And then I'm also going to go live trading. So there's going to be a live schedule basically put out. I'm going to really stop doing all the live trades that I do on my YouTube and really kind of make it more for my mentorship, really students. Every once in a while, maybe I'll hop on a YouTube live, but um, if you go to my YouTube page, there's usually videos where I'm on there trading live. I'll just hop on randomly to kind of show stuff off. But that's going to be more structured, right? You're going to have a schedule of when I'm going live every week. So you guys can hop on and kind of plan that out and be a part of that. So really those three things, right? Discord community where you guys can really kind of ask questions, kind of poke the bear, I guess, in terms of like learning, directly from me. I'll hop on there with like maybe a weekly lesson or something like that, kind of summarizing what you guys are learning in the course. The actual course, which is again is a series of videos that you guys can access and watch anytime. So you don't need to wait for a live boot camp for me to teach y'all. And then, like I said, live trading. So a lot of cool stuff that's going to be coming to that community. And again, the live trading is really going to be for educational purposes because there's it's really easy to learn concepts, but sometimes it's hard to apply them. So I think I learned the best when I watched people take these concepts over and over and over again, and you start to see like the pattern of the structure behind it, and you start to get it right. So I think that's missing from a lot of people. I think people are looking for signals, or they're looking for like, how do I make money fast, but they're not really learning per se, right? So like, I think it's going to be something that really benefits a lot of people to see me like day in, day out. Why am I taking this trade? Why am I not taking this trade? What happens when I lose? What happens when I win? Right? Like, and being able to see that process over and over and over again, because it's a pretty structured process. So hopefully the goal is that y'all will see it time in, time out, and y'all will learn and y'all will like, be able to apply it for yourself. Because that's the goal, right? Like I want to be able to create traders that can do this on their own and not necessarily need to be tied to me. So like in a year or two, you might say like, I don't even need to be part of your community anymore. Like I can do this on my own, right? And um, so those will be three things. If you guys are interested in being a part of that, I actually will drop the link here in the chat, right? Because I want to start redirecting people from Telegram anyway. So if you give me 2 seconds, I will drop the link here. Let me answer this question first. It's hard to trade SPX on CFD prop firms because of the contract size, and the SPS don't move as fast as NQ and 30. Right. So I mean, if that's the case, and that's true, I don't know where you live in the U.S. or if you're international, but if you are in the U.S., I would recommend kind of switching over to a futures broker, right? And trading that. The one reason that I kind of made the switch to futures is because at the time I was trading Nasdaq, and I couldn't really trade Nasdaq I didn't trust the brokers that I was trading with as much. Like I do trust Hugo's Way, um, that I had and a couple other brokers. Not to say I don't trust them, but it's just that anything can happen, right? Like a broker could just technically disappear on you. And so I didn't want to be in a position where a broker disappeared on me and um took my money or just kind of like left me high and dry. So I ended up switching over to futures really so I could trade Nasdaq and ES more and do it legally, not legally, I guess, better under a broker with restrictions, right? So and that had legal ramifications. So I would say like if you live in the United States, go look at a futures broker, right? Trade of 8. I use AMP Futures. That's kind of my broker of choice. I like how it's integrated into the TradingView platform. So basically, I do all my trades and executions on TradingView. So I don't have to like have trading, MetaTrader open on my phone and then, MetaTrader maybe on my computer or something like that. I can do everything on the same chart that I analyze with. So I would say look into that if you really want to trade indices. If you're in the United States, if you're out of the United States, then you're kind of stuck with, I mean, maybe your country might have its own like service, or you're kind of stuck with the Forex ones. So if that's the case though, yeah, I would say, Nasdaq, I mean, US30, to me, it's not really necessarily about volatility. It's more about how much money is in your account too, because like you can make $1 million a day trading Euro USD, right? Like, or Euro futures, right? Like I made 10,000 on Euro and GBP, right? And so I think that's it's not really necessarily about the money that's or the charts volatility. It's about, are you catching the moves consistently and how much money is in your account? And I would argue if there's not a lot of money in your account, then maybe you don't want to be trading like indices to begin with. Like I would probably bring it back and look at more of the currency stuff, just because you can do more with less there. So, or you can, take advantage of big moves and you're not gambling as much. So yeah, I would say, look at that for sure. Don't be scared to jump platforms. Like that was something that I did a year ago, 2 years ago. Like for the last, I'd say from 2015 to 20, yeah, really 2021, right? Like I was looking at mostly Forex platforms. Like I was using MetaTrader every day. And I was basically trading. I was either trading on my phone or I was trading on my laptop, right? But I was using MetaTrader as my main platform, my main market. I understood like if I put 10 lots in a trade, how much it's going to get me, how much I'd lose. Like I could do all that mental math in my head. But just after the whole MetaTrader kind of fiasco and all these brokers stopped getting dropped and they all started coming out with their own systems, I just kind of decided that I wasn't going to use MetaTrader anymore and I was going to jump ship to like something more professional, I guess, or more regulated. Um, yeah, so it's don't be scared to jump platforms, I guess, long story short. And it gives you more options, right? Like because you can trade SPX, the full contracts, you could trade, SPX is ES, right? So ES, you could trade MES, which is the micros, that's the smaller ones. You could trade full contracts, like all that type of stuff. So I definitely made the switch over, and I don't see myself ever trading on MetaTrader ever again, to be honest with you. But yeah, so that's all I got for you guys. We got time for a couple more questions. Again, if you want to follow me on social media, you can follow me at Brinks Trades here. And then if you are interested in becoming part of the, I guess, the new course, the new mentorship, and kind of getting all those benefits that I talked about, here's a link to the actual course. It is called the Profit Playbook. That's the new community, right? And I told, copy link, told my Telegram people that this is a soft launch. In the next week or two, I'm actually going to start really advertising this on the really through like advertisements on social and stuff like that, running ads and really kind of running like a marketing strategy with that because I'm the marketing guy outside of trading. So I got a lot of ideas on how I want to grow the community and really add a lot of benefit for you guys. But until I do that, really, this is the link to the actual course. And I have actually like a free trial running right now. So anybody that joins right now will not really have to pay anything. You guys get access to the Discord stuff for free. I think there's like a week trial on that too. So you guys can come in, see basically what stuff is going to look like, and then kind of make the decision if you want to stay in the community or not once that happens. So I would definitely recommend everybody kind of take advantage of that because I love trying stuff for free. And I think you can see kind of basically a little bit into how I think, right? You can start looking at the course. You're going to get access to the Discord, all that stuff. And so I think it's a really good opportunity for people that, have seen me trade for a year or two, but kind of want to know more about how I do this. So the course right now is geared towards currencies, right? Because I figure that's going to be the easiest thing for people who are new to learn. And then if you are gradually, I'll add more of the Nasdaq stuff on there too. Probably in the next couple days, I'll start adding the Nasdaq and ES stuff. But I figured I wanted to start again with the easiest thing for people to come in and learn and trade. And I did a seminar in Miami, a summit like a couple weeks ago, and everybody down there, I mean, they basically started trading with indices, right? And I was like, yo, this is crazy. Like you gotta, not to say that not to say that learning indices isn't bad, but like starting with something smaller just so you can wrap your head around things before you move to something that's quicker volatility um, is always good. So don't be scared to start with something small and grow gradually. So again, but the courses are going to cover NASDAQ, they're going to cover ES, they're going to cover currencies. So whichever one you guys want to focus on, you can learn. So definitely check that out. Take advantage of that because that's not going to be around forever. And again, if I got access to a course where the person just made 10 grand in a day, then I think, and it was getting the access for free, then I would definitely take advantage of it. So, so it's better to trade ES on the futures market. Yeah, I would say, yeah, if you're gonna trade, indices, right? Like, do it on a actual platform, right? Like an actual broker that trades futures, because this is kind of like the more professional stuff. Again, futures. Like I have a video on my YouTube page if you check it out, and I talk about the difference between futures and forex. But futures are going to let you have more of a there's no spread in futures, right? So you're not going to get quoted with bad fills. It's all a regulated place. So because there's no spread, the brokers control the spread, not the actual like market. So in forex, the brokers control the spread, not the market. So when you trade futures, everybody gets the same price, right? So like if I'm on Hugo's Way and you're on KOT Forex or Sway Markets, right? We all enter at the same time. We're all going to get quoted a slightly different price because the price is coming from the broker. The broker is giving us the spread. But futures, everything is regulated. Everything is one spread. So you can't really like give people different prices. So if we all hit buy at the same time, we all hit sell at the same time, we're all going to get the same price. So yeah, check that out. Again, if you guys have any questions, you can find me either in that Discord. Again, over the next couple of weeks, I'm going to start transitioning away from the Telegram and then kind of funneling more people to the Discord. I think I'm going to set up more of a free community on there too. So like the people that are not paying long term, there's going to be like some stuff that they'll have access, like a general chat, kind of like the TickUps is, right, where there's a general chat and then my mentorship stuff, but all that stuff will be in one location. So the people who are mentorship students and paid, they'll just have access to that. So versus the people that don't pay and they'll just be free people, they'll only have access to a certain amount of stuff. So which would probably just be a general chat, and that's it. So so again, if you guys have any questions, you guys can find me there, but I'm going to go ahead and log off. Find me on social media if you're interested about the course, if you're interested about the anything really going on this year. So it's going to be a crazy year this year. So hopefully everybody takes advantage. So and I'm definitely going to keep putting numbers on board. So hopefully you guys can be part of the journey with me. So I'm going to go ahead and end. Everybody have a good weekend, and yeah, I'll catch y'all next week.
Hey folks, what a view behind me. I'm at Blackbull Markets headquarters here in Auckland, New Zealand. Speaking of views, you can get TradingView paid plans for free at Blackbull Markets, saving you up to $600 a year. Get either the Essential Plus or Premium plans absolutely free. All you need to do is trade from one lot a month at Blackbull Markets. And you can also get a 100% deposit bonus for your first deposit up to $1,000. All you need to do is click the Trading Nut link in the description below. Hey, start trading Forex indices and commodities with up to 800k of Blue Guardian's capital risk-free. Just pay a small one-time fee to take the challenge, hit a profit target and get funded. Then keep up to 90% of your profits and enjoy fast weekly payouts. Now for futures traders, Blue Guardian Futures offers up to 450k in funding with 100% profit on your first 15k. With low targets, no activation fees and unlimited resets, it's one of the best deals in the industry. Visit blueguardian.com or blueguardianfutures.com to start trading today and grab their limited time discount code.